And it looks like you've been on a bit of an acquisition spree lately. So the latest announcement came through late yesterday. You also announced recently you were buying a number of business units from UCS.
Yes.
What are you trying to do? Where are you taking the group with these acquisitions? What are we adding on to the group?
Thank you very much. I mean, if you looked at our strategy for possibly the last 3-4 years, Business Connexion went through a lot of revitalization. And certainly with the market where it is and executing on our strategy, we started seeing a lot of opportunities. We spoke about UCS, which we announced in December. We bought 5 business units out of UCS. And UCS, what it does, it offers us quite a extensive reach to the retail sector through the services business. After doing that acquisition, we immediately were made an offer via Verifone because they wanted to enter the South African market. And they bought Destiny e-commerce, which was one of the 5 business units that we bought. Now, what we did yesterday in terms of this investment is very much a strategic investment, and it's an investment we've spoken to our shareholders about and to the market for some time. If you recall, last year in 2010, we spoke about getting into a joint venture on a managed printing services with Canon around the SOS. Now, this is very much a natural extension of that investment. And that investment, what it does is that it actually brings a very important part in our ICT space, which is the managed printing services. If you looked at the history of printers by their nature, 10, 15 years ago, it was something that was done and relegated to the procurement process. Today, they're very much intelligent devices. They're part of the network. They're part of reducing the total cost to ownership, and very much they become intelligent devices. Now, Business Connexion position in terms of being a leader in outsourcing, in a lead of cloud computing, what we're doing in terms of the managed printing service investment, it allows us to play in a very significant part of our market.
So are you going to be putting printers into offices and managing those printers within the office space?
Well, I mean, I think that, the important part is that with this Dusty Moon investment, that's already happening. They've got quite a lot of large clients. They've also got a lot of small, medium size. What traditionally we've done in the past is that we've never looked at that part of our business. Although we've got quite a lot of large enterprise clients, from the mining houses to some of the retailers as well. We've never had that as a value proposition. But I think more importantly, it's also an investment that allows us to also have a bigger resale base. Canon itself is not just only Canon, it's got other very strategic investments in terms of Samsung and others. So they're not the vendor agnostic in the sense that although they lead with Canon, they've got other brands, but they also work with other IT players as well. I think it's very, very important to highlight that this is not just for Business Connexion clients, but I think it very much put us into an ecosystem that we've always missed out on.
And you say this is going to be earnings accretive from day one of this transaction?
Yes. Yes.
What will it add to your earnings?
Well, I mean, I think if you look at it from just the headline earnings, you're looking at the impact of 19%. And we really had to use historical results because we obviously couldn't use, the JC wouldn't allow us to use the current results because the year end is only end of June. Then also there's also very much a positive impact on just basic earnings, 15%. But I think going forward, what's important as well is that the 2 profit warranties, so they've warranted the profits in 2012 and 2013. But I think it's also important to highlight that it's a very, very established business. It's a business that's got a wide, extensive network. And both UCS and what we've been able to do around investment in Canon, we've been able to do proven companies that have been around for more than 15 years, proven management. So I think for us as a business, it's a little bit of a less risk. These are not startups. These are established brands. They've been able to deliver consistently.
Mm-hmm. How are you seeing the customer at the moment? Is there big demand for these services as companies come out of the recession and start to kind of bulk up their programming and stuff? Well,
I mean, the recovery is still slow. I think that the key is everybody wants to reduce the total cost of ownership. People are looking at what we're finding out in the market is that costs are becoming quite a big issue because of the recovery. That it's been a very, very slow recovery, but the opportunities are immense. I think what also with this investment, it also allows us to have a part of the business or part of the market we've never had, which is the small to medium size. And as we build a cloud computing strategy, we'll have access to some of those clients in terms of bringing them into our data centers. But on the enterprise space, it's still a little bit slow, but the exciting thing about it is that we're still going forward.
Is this deal restricted to South Africa? Will you be able to take it across borders into other Southern African countries or even beyond?
Well, I mean, as a Business Connexion, we're in 6 countries. We're currently in Mozambique, we're in Tanzania, we're in Namibia, we made an investment in Kenya, we're in Nigeria as well. This serves as a springboard for, first of all, look at Southern Africa and also looking at for the rest of the continent. So we're very excited about this opportunity.
integration of all this with your current businesses? Because that's obviously going to be pivotal to the success. How's the integration going to be planned? When would you expect to have the integration completed?
Well, I mean, for us, the integration, I think that the Canoa opportunity or the Canon opportunity or investment is not very much about integration because it's a business that, what it will does allow us to do is to give us more scale in terms of the break and fix and the footprint. In terms of our people now, you put UCS assets that we bought. You possibly, from a South African perspective, we possibly now got a bigger footprint and more resources on the ground to service people wherever they are on any part of South Africa, and it's extended. And also when we did the UCS, we never sold the transaction on synergies. Yes, there will be things that you'll do, but quite honestly, these businesses have run efficiently. We're not going to try and force the integration. They've been very successful in their own right, and they offer very specific things. So I think what you see about Business Connexion as a group, it will have different, and the Canon investment is one investment. What we've done with UCS is to sharpen our skills and to bring a lot of skills in the retail sector.
Nevertheless, is there any potential for cost savings? Can you share head office costs throughout any of this?
Absolutely. It's happening as we speak. I mean, I think that there's no doubt about it. The key in today's market is not just about offices. Mobility offers a lot of things for us as a business to actually cut down on a lot of costs. Obviously, we'll have one auditor and some of the things that are called the low-hanging fruit that it just makes natural sense to bring it down.
Mm-hmm. How about the funding? Because I know you raised some money in April, 250 million rand. With the UCS transaction, you put down 30 million in cash. The rest of that was paid with stock. How's this one being funded? Do you still have cash to pay for it?
Well, this one was done by the cash that we've raised. But also you recall, after selling the 70% of what we own in Destiny, we'll be getting some cash. But I think we actually had, when we got the raising and funding, we possibly had this in mind. It was one of those things that, from a long-term strategy point of view, we wanted to use the cash for that. I think that after doing the UCS transaction, we would have stretched our shareholders if we'd gone and back to them and said, we'd like to use paper for this transaction.
So have you spent all your money now? Is it time to bed down these transactions?
Well, we're still generating cash, so I think that's the important part in a very, very challenging environment. I think now it's time to bed down the transactions. I think we've had a very busy year in terms of acquisitions.